Hi everyone, let's cover my Elliott wave scenarios on Bitcoin on the daily time frame. Starting with this bullish, very obvious scenario, but it doesn't have the highest probability. So here we have a 5-wave impulsive structure. Wave 4 is finished and we look for a wave 1, 2, 3, 4, 5, a continuation to the upside. Now the probabilities for this scenario are impacted because of this move here to the upside from 89k to basically the all-time high. This move on the lower time frames does count better as a 3-wave corrective zigzag family structure compared to a very nice impulsive structure. So this is something we have to keep in mind because in this scenario you need this to be a 5-wave impulsive structure, and then you count a WXY on the lower time frames, which then is a running flat X and a zigzag to preferably finish your wave 2 at the low, which is the reason why the invalidation for this scenario now is at 97.7k. Now here you then look for price to move towards the upside impulsively, where generally a minimum target is the 1.618 trend-based fib extension taken from the low to the high of 1 to the low of 2 around 130k. After wave 3, we look for a sideways range in 4 and then one more push to the upside in a wave 5. Now the problem of this move being an impulsive structure or 3-wave corrective structure is the same when we try to count a WXY. So here we have a wave 1, 2, 3, extended corrective structure in 4 and move up in a wave 5. However, in this scenario, also wave X has to be counted as a impulsive structure because X is a flat A, B, C. Now just in a little bit of detail, we look for a WXY, which is a sideways double combo, a sideways 3-wave corrective structure. Wave W can only be a zigzag or a flat. Now clearly, it is not a flat structure, so W has to be a zigzag, but we cannot finish W at this particular low here, because this move then counts as a double zigzag, which would be a WXY inside the blue W, but a wave W cannot be internally a WXY double zigzag. So that is why we have to put W at this low or this low, it doesn't matter, as your X is then always going to be a flat structure A, B, and this is a wave C. Wave C has to be a 5-wave structure, cannot be a 3-wave structure, and because this move on the lower time frames does count better as a 3-wave corrective structure, not really a 5-waver, it negatively impacts probabilities for this scenario. But still, it's good to cover. So then we have our wave Y here. Y can, in this particular scenario, then only be a flat structure, which is a yellow, A, B, C, continuation up, or a triangle, A, B, C, D, E, continuation up. The reason wave Y can only be a flat or triangle is because a W is counted as a zigzag structure, and if wave W is a zigzag in a sideways WXY, wave Y is not allowed to be a zigzag structure. Now then we get to the scenarios that have a higher probability. So starting with the bullish scenario and then the bearish one. So here we have 1, 2, 3, 4, we look for 5. It is very early though to start calling diagonals. Preferably with diagonals, you only give them really the highest probabilities once a wave 4 is finished, which clearly is not the case here. So you have a finished wave 4, and then you have a 1, 2, 3, 4, a 5-wave structure to the upside to finish wave 5 and then move down. This is an ending diagonal, and in an ending diagonal, all of the waves, wave 1, 2, 3, 4, and 5, have to be 3-wave corrective structures, zigzag family structures. So that would work with this move to the upside on the lower time frames. Then possibly here your 2, preferably your 2 is then in. Then you look for 3, 4, and then 5. But then again, preferably we wait for 4 to be in to really give this the highest probabilities. Now we do like to see overlap in a diagonal between a wave 1 and a wave 4. Preferably wave 3 is shorter than wave 1. That is not a must, by the way, but it's just something that is most common. And we do like to see wave 5 being shorter than wave 3 in a price. Currently the invalidation 97.7k. And then we get to the flats. And at the moment, this is actually the most interesting scenario, especially the orange line. So here we then have 1, 2, 3, 4, 5. And in this case, wave 4 is then counted as a flat, which is one of the most common wave 4 patterns. Now you might think over here when you look at this structure like, holy shit, wave 4 is really big compared to wave 2 in time. But if we take a fib time from the start to the end of 2 to the end of 3 here, then you can see that for this wave 4, we have more than enough space left still before we start to reach the red fib times, right? It's no problem for wave 4 to finish around the 2, the 3, maximum 4, but you don't really like to go to 5, but that's May, right? So we have a lot of time still. Now in this scenario, we then have a blue and a orange count. The blue count is a regular flat structure, 3 wave in A, 3 wave in B, so we count this now as a 3 waver, and then you have a wave C. This wave C is counted as a diagonal because this move down has a higher probability to be a 3-wave structure. And just like with the bullish diagonal, the ending diagonal in a wave 5, it's difficult to give this the highest probabilities because you then only finished your wave 2 here or close to finish your wave 2. You still need 3, 4, 5, and preferably we only really cover this scenario as a high probability scenario once wave 4 is finished, which clearly is not the case. You first got to take this low, move up in a 3-wave structure, create 4, and then go down in 5 to finish C, and up we go, right? So therefore, the probabilities would be better for the orange line, which actually from a psychology point of view would be very interesting because you have a 3-wave A, a 3-wave B, 5-wave C. This is, of course, where everyone is going to be buying and hype and all-time high and 200K, 500K next and all of that jizz. And then eventually you just be like, well, thank you for the liquidity. Down we go. Preferably you grab this low of wave A, which is most common. It's not necessary. You can have a running flat A, B, finish C somewhere here and then move up. But at least you drag down the people buying here, hit the stop losses, liquidate them, and then eventually continue to the upside, which of course, from a psychology point of view, is definitely an interesting scenario. So in that case, your wave B in orange has to be a 3-wave corrective structure. It can be a zigzag A, B, C, but preferably it's not because wave A has to be then a 5-wave structure. Probability is lower. This is a 5-waver. So a WXY double zigzag works better. Count a 3-wave structure here, wave A, B, C, right? Then a 3-wave move down and another A, B, C up to finish B. The moment, if price would move down, we touch the 0.7 at 95.1K, the probabilities for the expanded flat go down significantly, right? Now, the most common target for wave B of an expanded flat is between the 1.236 and the 1.38 Fibonacci, 112.9K, 115.8K, and then you want C down and continuation up later. Now, as you can see, all of the scenarios actually lead to upside, right? Preferably upside first before taking out the low is the highest probability. And then depending on how price moves to the upside and takes out the all-time high, we'll know what comes next, right? But the probabilities are higher to take out all-time high, at least before taking out possibly 89K. Now, we do have some news later today, Friday here, January 31st. Wow, we're almost in February already. The year is flying. 2:30 p.m. Central European time. We have some high impact news. And if we then look at the probabilities and the polylines, then in case you're not familiar with the polylines, it's basically a summary of all the Elliott wave scenarios and the expected price action. And what you can see here is that the probabilities are much higher for price to take out the all-time high and move towards the upside, at least before possibly taking out 89K with the orange line at a later stage. But first, probabilities are higher to move towards the upside and take out the high. And then depending on the structure to the upside, we will know what is next. So that is also the general conclusion here, is take out all-time high, look for higher prices. Depending on the structure, the volume, the impulsivity, we will know what comes next. Now, of course, up here, there is some more stuff in more detail. So the probabilities depend on the count to the upside over here from 89K. Now, this counts better as a 3-wave corrective structure. It also channels better, by the way, as a 3-wave corrective structure. And that would fit with a flat or a diagonal. Now, a bullish wave 5 diagonal, that is the pink line here, is very early to call at the moment. And therefore, probabilities would be on the side for a flat. However, also a diagonal in wave C of a regular flat, A, B, C, the blue line here, is very early to call, right? And generally, only one really likes to call diagonals when the wave 4 is in. So therefore, your probabilities at the moment would be expanded flat ABC, that's the orange line. On the number 2 spot, we then have the diagonals, right? Either your pink line or your blue line. And then on the 3rd spot, we have impulsive continuation and the WXY, which basically is the white line, it is the yellow line, or it is the red line, which is the triangle, and then you move to the upside. So this is currently the probabilities on the daily. I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.